What's up, gold miners? In today's episode, I have the great privilege of interviewing Dr. Jasdeep Singh, who went from full-time surgeon to hotel mogul. And in this episode, we are going to go in depth into that journey from being a full-time physician to a full-time real estate investor. We go in depth into why JD chose to focus primarily on hotels as opposed to other real estate classes. Later on in the episode, we get into the challenging commercial real estate environment right now and what JD is doing to navigate these turbulent waters to find the golden opportunities in today's market. And then finally, we spend a lot of time, we go in depth into the various investing strategies available to physicians, as well as the advantages that physicians can realize by investing in hotels. So without further ado, everyone, let's welcome to the podcast, Dr. J.D. Singh. JD, welcome to the Gould Mine.
Oh, it's a pleasure. Thank you for the invite.
Yeah, man. You know what? We have gotten to know each other pretty well in the short amount of time that we've known one another. And the question that always comes up in my mind is, how does one go from being a surgeon to full-time real estate investor? What made you decide to transition? Like, what was that aha moment? What was that moment in time where you were like, I need to do this?
Well, to be honest, sometimes I wonder. But honestly, what happened is that, medicine is a everlasting. Yeah, it's all about dedication. Your priorities change. It's about patient care, the person in front of you at that time. So back in 2012, during my starting of my residency, while doing my fellowship in bariatric surgery here, there was a moment when my first child was born, 2012, and I literally was not there. I was in the operating room. My biggest thing was my patient. Everything else is secondary. I just said, working so hard, but I'm not at the moments in life where we cherish, and I wasn't there for the first week or 2 weeks. And, it got to a point, I'm just thinking to myself, what am I doing this for? Is it for the love of medicine? Is it for me? And I took aback and, destiny took me on another realm. I love business. I've always been a wheeler dealer. And so I said, you know what, there's a point in time where you exchange your time for money. But there's a point in life too where your money should work for me. When I'm sleeping, my money should be working for me. Leaving money in the bank, it's losing its value. So that's when I took a step back, and with the changes of Obamacare, it became more procedure based. Where I used to do one procedure, now I do 2-3 procedures to keep that compensation. And, you're in the OR for 12 to sometimes 14 hours. And these are complex cases because you're dealing with high complications with patients with high risk, especially with obesity. And that's why I took a step back. And now in my own businesses, I'm my own boss. I wake up, I do what I want to do. I just need a laptop and a phone, and I can be anywhere in the world. So that's when I had that moment. And I took out that leap of faith, and people thought I was crazy, but I think I made the best decision ever.
Yeah. It's whenever you make a life change like that, I'm sure that you had your naysayers, the critics, the people that said, don't do it. How did you deal with that? What was the mantra, or what were the things that you kept saying to yourself to get over the peanut gallery?
Yeah, absolutely. It was a tough decision. To be honest, the first year was so tough. I didn't know what to do. I didn't have that consistency check, that was coming in. Mm-hmm. And on top of that, medicine, 30 to 40% goes to Uncle Sam, And so, just saying, I was doubting myself every day. Hey, man, did I make the right decision? Am I an idiot? Why did I do this? I went to school for 12 to 14 years plus that, I'm with training. And, the thing was that, you see a light at the end of the tunnel, and it always takes one deal any deal, one deal to change your life. And that happened to be my first hotel deal I did in 2012, where I'd invested it in the suburbs of Seattle. And, that one hotel kind of partially paid my salary. And I said, okay, if I do one and then I do another one, man, this will entice my whole salary. So, dogs will always bark, let them bark. You do what you do, you do it. I do it for myself. I have a why. And that kind of pushes me to her, those naysayers, it excelled me even more. And I thank them. The doubters, I thank them till this day. Just putting that perspective, because it pushed me even harder.
Yeah, I love that, man.
So even those naysayers, thank you. If it wasn't for you guys, I wouldn't be where I'm at. Like I said, I have more than I deserve. I'm content. But I just love doing business or real estate with some commercial or business aspects to it.
So you have your why. It's very clear. You have a family that you love, and you wanted to prioritize or make more space for your family. And that started in 2012. We're now a decade plus into this journey. Why don't you talk, how did it start? So you had your first hotel in Seattle, and kind of walk us through where you were at then, like from the first acquisition through to, today.
So, I had a great mentor, was my brother-in-law. He brought me in this business. One thing he taught me, a doctor's salary is fixed typically. Now, there's not much you can go up or unless you have your own practice and stuff like that. And for surgery, it's all procedures, more procedures, more money. It's that simple. And so he was my biggest mentor. I learned a lot from him. We bought our first hotel there. Then we bought our next one in Hilton Head Island, which was 2 hotels. And, he was ahead of that project as well. And, we took a condemned building. And with his guidance, within 8 months, we salvaged it and branded it as a Best Western Plus. And then we added another hotel. We'd run that private, and then we made that into a Choice by Choice Hotels, a Centium Collections, a soft brand. Now we're on this year, end of this year, we hope to make it a DoubleTree by Hilton. So, it's just one deal to the next. Then we bought this is when I got my foot wet in operations in Orlando. We had bought a hotel there too. We first bought one, then a second one. We had dual branded those. And then we bought a third one near Disney World. And then after that, we bought probably our biggest asset then was in Jacksonville, Florida. So it slowly added one by one, had great partners, very understanding and we expanded and, sometimes we expanded too fast and sometimes we made some mistakes here and there. I'm not going to say it was perfect, but, you just take one deal, you sell it, then you go to the next big one, then it gets to the next big one, gets bigger and bigger. And so that's how we started. And now we have a portfolio of hotels and it's been a learning experience. We've made mistakes, but with those mistakes, we have excelled at least 20x what we are. We wear our failures and losses of money as our badges. It's a ever-growing business. So, but I love the hospitality business. I'm not just in hospitality. I'm kind of diversified in self-storages, flex space, office, land, development. So a little bit of everything, but I'm really heavy into hotels and of course, multifamily.
That's a big switch though, right? So you have your 9 to 5, so to speak, you're a surgeon, and then you quickly make a huge pivot into hotels. First of all, why hotels? Of all the things that you could have gotten into, what was it about the hotels that drew you to that? Was it the personal relationship then with your brother-in-law, or were there other things outside of that drew you to hotels?
Well, the hotel business, a very dynamic business. It's not, you have the real estate business, you have the land and the building. That's one aspect, okay? That, things always appreciate. The other business is you have a business within that real estate as well. And there's different formulas to it. You have extended stays, you have limited service, you have full service, you have resorts, timeshares, or the newest thing, a hybrid of condo / a hotel. I mean, so there's multifacets. On top of that, people always travel. People need a place to stay. Transient guests need 1 night or 2 nights. You know, we have business travelers, we have government business, we have students, you know, and then there's leisure business, of course. And then, you know, right now too, a lot of people, I mean, there's a shifting demographics happening right now too. So a lot of people cannot afford rent. I mean, there's Class Bs moving to Class C, Class Cs moving to D, Ds moving to mobile home parks. Those mobile home parks are running to these weekly motels. So that's a different business plan right there. That's a niche that a lot of people are not focusing, is those weekly hotels where people cannot afford, with inflation, people cannot afford deposits or a monthly rent. So they pay weekly or sometimes daily. So that is another business too. So with a hotel, there's so many different demographics, business plans, and different things, components to it. And then you can add small businesses on top of that, you know, food, F&B, food and beverage, you know. And, you know, and the other thing is too, is the, you know, hospitality, you know, giving a person a smile. You know, the small things always matter in hospitality, and giving them amenities they need because they're away from home. And our job is to provide a home within a hotel.
100%. And actually, that's one of the biggest draws for me personally into the hotel sector as well, is the business component of the real estate, right? So most other asset classes, it's you buy the office building, you lease it out, triple net, and you don't really do much afterwards. There's no business aspect to it. And I think that's the unique thing about hotels, is that there are a variety of different types of hotels, as you mentioned. And then subsequently, there's business plans associated with each type of hotel. And so there's a lot of nuance there and opportunity to not just be a landlord, but be a business person. And I think that's the really cool thing about hotels. And it sounds like you feel the same way.
Oh, absolutely. Absolutely. I mean, there's more to it. You know, on top of that, there's different operations on top of the businesses. You know, you have your front desk, you have housekeeping, maintenance, your food and beverage. So there's a lot of components that go into the operations and in this business. And the thing is that, you know, with hotels, which I love, you know, it's another thing too, is the tax benefits. Even with the cost segregation, you can even cost segregate a piece of towel. And that is huge. And that's one of the biggest things too. You know, in a multifamily, you can, you know, depreciate the assets of the structure, but within a hotel, you can even depreciate the towels, you know, the toilet paper to a certain degree. So hotels have a huge tax savings.
That's interesting. And that's something that not a lot of people really think about. They, you know, when exploring different commercial real estate, it's usually what's going to generate the most amount of money for me, right? Or what is the most accessible. Exactly. But it's not always which one is the best investment from a overall cash to me, or like overall like a receivable cash to me in terms of revenue, profits, and tax incentives, because that's something that not a lot of people think about really. So it's interesting that you bring that up. Absolutely.
The other thing too is that, you know, let's say office space, multi-family, self-storage. I mean, there's so much value add you can do to that. You know, how many times can you change carpet? How many times can you paint the walls? You know, everything has a lifespan. But in a hotel, you can drive it as much. You can drive your sales. You can drive, you know, change the flap, change a different brand. There's so much components, more value add things you can do than changing carpet. I mean, you're just stuck to that one small, simple thing. You can increase your rents, but here in hotels, you can drive it as high as you want. And that depends on you and your aggressiveness. You know, you can drive sales, you can get corporate business. There's so many facets to this business. It's just not one way, you know. There's leisure business, marketing. I mean, there's so many different things you can add to sales. And that's what's so attractive to hotels. You're not stuck to one business model.
That's a really fascinating point. So switching gears a little bit, you obviously had a lot of interactions with physicians, probably still do to this day. Absolutely. And what I've observed, and I'm not sure if you share this observation or not, but I feel like a lot of physicians are hesitant to get into real estate investing, or I don't see a lot of physicians investing necessarily in real estate. What do you think holds physicians back? Like, what are some misconceptions? What are some of those the reasons for physicians not buying as much real estate as you would think they would want to or have the ability to buy based on their income?
And I'll be quite honest with you. Doctors are not business savvy. They don't know numbers. Raising capital from doctors is really tough. It's a lack of education, a little bit more holding their hands and showing them, guiding them through. There hasn't been any efforts to educate doctors. I mean, if I compare that to engineers, where engineers are really they know their numbers. They're very analytical. Doctors are the other way. They tend to be more book smart and not number smart, to be quite frank. But I think with doctors, I mean, they have capital, but they do not know how to invest in real estate. So I think 100% of it, I think it is, number one, you need to educate them. And number two is show it, it just takes one deal. I know some doctors, they were hesitant the first time, but with education, putting in your first deal, they're going to keep on calling you. Hey, when's the next one? When's the next one? When's the next one? Because they can see that value of the money where they can 2x, 4x, or 10x, depending on the deal. So the biggest thing is getting the name out there. Like me and Danny up here are writing a book about hotel investing for physicians. Mm-hmm. Some education materials that we can educate physicians, showing the numbers, showing them the numbers at the operations and the performance, what they anticipate, instead of keeping it in a 401k, mutual funds. Because in today's market, I mean, more millionaires have been made in real estate. Donald Trump made his billions from real estate. Robert Kiyosaki, name anyone. I mean, it's the oldest profession, real estate. Mm-hmm. And so, like I said, it's just a lack of knowledge for doctors. And you got to sit down. They're smart people, but we just got to take a little bit more time to understand the procedures, the logistics of everything, and how a deal is formed and what you anticipate. And top of that, the tax savings. I mean, doctors are taxed at least 40% of their paycheck. And you can tell them, hey, man, why are you paying taxes? With real estate, it is something that, you can depreciate, accelerate that depreciations and pay no taxes. My check, 40% was going to Uncle Sam. And, as much as we have to pay taxes, but, there's laws out there what, has been beneficial to, real estate. That is why, politics and real estate always go hand in hand. I mean, there's so many laws and tax just for real estate.
Yeah, there's a lot to unpack there. And the first thing I'll say is shameless plug. You talked about it just now, JD. You and I are co-authoring a book on investing in hotels for physicians, and that link will be available in the description. So if you're listening to this podcast and you're interested in checking that out, the link is in the description, and you can go ahead and download the book there. So that's number one. Number two is there's physicians listening to this podcast right now, JD, that listen to what you just said, and their first thought is, oh my gosh, like that sounds awesome, but like I don't have the time to run a hotel business. I am busy with patients. So sounds like a lot of work for someone who is heavily involved in another business. So what would you say to a physician like that?
Absolutely. A lot of doctors, they put their money in the stock market. They just leave it there, and, stock market is very volatile. It goes up, goes down. Where in something as a hospitality business, it's a fixed asset. It is something you can touch, feel, and just like this, you leave it to the professionals like myself or Danny, where we know this business, On top of that, we have parameters with franchises. They have a protocol. They have brand standards. So, you just get that check in every quarter or every month and leave it to us. And with these kind of business, you can do 4X to 2X from, well, I would say 2X. That's, more multi-family office space. But in hospitality, it is 4X plus in instance, depending on deal and the markets. But, it could be a passive investor and you get a consistent check. And there's not much to it. And it's pretty much that simple. You put in the stock market, it goes up and down. But this is a different investment. You can go to a hotel. You can have pride. I'm a part of this hotel. You can see the business. You can see the marketing. You can see the changes that are happening and the consistency of business people coming in and out. Where, 401ks, man, sometimes you have good days, sometimes you have bad days. Mm-hmm. And with real estate doesn't go down 40, 50%. It stays stable. And if you compare real estate to the stock market, real estate has always done good. And on top of that, you get cash flow. As the thing is appreciating in value as time is going on, you're also cash flowing from the income you're getting from hotel guests. Mm-hmm. There was a study done where, monkeys can pick stocks better than humans. They were throwing, symbols and that. And so at this, there's not monkeys doing this. These are sophisticated systems. These are sophisticated key performance indexes out there. There's standards out there. A housekeeper needs to clean a room in 28 minutes. There's so much more. How long does it take to check in a person? Sure, take more than 4 to 6 minutes. So we have standards. We have charts, and we look at these small data to make more efficiency. And you don't need to leave that to us because we're good at our game.
100%. And by just a couple of notes here. So the first one being, JD, you just touched on different passive investment strategies and probably a lot to unpack there. We might get to it, we might not, but the different investment vehicles that you can invest into that are more passive, right? More like, you just put it in there and let the money work for you. All of that is covered in the ebook. So if you're interested in learning more about those types of investment strategies, as well as investing strategies that are more self-directed, as opposed to passive syndications, equity funds, etc. So if you are interested in any of that, you should definitely check out JD and I's book. So let's switch gears a little bit. Actually, one last thing here, because you said it, and I don't know if we'll get a chance to revisit it. The cash flows. The cash flows on hotels, how do they compare versus other commercial asset classes? Because you own a lot of different types of real estate, yeah? So what do the cash flows look like with hotels versus other asset classes?
Oh, let me talk about margins. It's usually, it depends on the hotel, limited service to full service. So you're looking at 25 to 40% EBITDA margins on that. That's huge. For every dollar, you're getting a margin of 25 to 45%, depending on that. So I don't know any other industry like that. Self-storage, there's so much you can do to that. But hotels is a dynamic business. There's the more input, more sales you can drive, more money you make. But, just a rule of thumb, I always put it about 50% here and there, roughly.
About what? Sorry?
About 50. The margins are close to 25 to 45%. But just a rule of thumb, just to be more conservative, I always say 40% or so on your margins.
Mm-hmm. Yeah. So when you talk about like cash on cash returns, it's interesting because Cornell, I don't know if I shared this one with you, but Cornell University did a study. It was a 25-year study. I believe it started in 1989 and it went through 2015. So wow. 3 bear markets. Right? You had the 90s bear market, you had the dot-com crash, and you had the Great Recession in 2008-9. Despite those 3 bear markets, hotels outperformed every commercial real estate asset class, and it wasn't even close in terms of annualized returns. So when you look at just like the overall cash flow potential in a hotel, it is better than multifamily, it is better than office, especially nowadays. Retail, better than retail. So they, now I'm not sure if they did self-storage. Self-storage is kind of like a newer, and it's kind of like a niche thing.
Yeah.
But there are lots of different commercial asset classes, industrial, all of those. They measured hotels against all of those, and hotels outperformed every single asset class, which is interesting, especially because people are afraid of investing in hotels because of economic concerns, right? So that when the economy goes through a rough spot, the concerns are, well, we're going to, that the hotel's not going to produce as much income. What has your experience been with that, JD?
What's funny is that people, during COVID, everyone was under house arrest. People cannot sit around. They need to move. They need to be going. They do staycations. People need to get out, visit places, travel.
Yeah.
And what's funny is right now, hotels are doing better than they did my pre-COVID, which is funny. So people are traveling more. People need places to stay, business, government. People always traveling. They fly from one area to another, and they need a place to stay.
Yeah.
So I see, people cannot be, stuck in one place. They need a place to stay, and hotels provide that accommodations. And on top of that, it's funny that we're busy than pre-COVID. My numbers are better than 2019 numbers right now.
Do you think that there's a bit of a rebounding effect, right? So that's a 25-year study, right? So maybe perhaps during those bear markets, there was a time where the income and the revenue was lower, but then when you spread that across, so in 2020 it was a really bad year, but when you factor in the rebounding effect in 21, 22, it neutralized the down in 2020. Yeah.
Yeah, if we do the averages, absolutely. And I think still, even today, it still outpaces than any other commercial real estate out there.
Yeah, it's interesting. That's really interesting. And I think it's something that a lot of people don't even who talks about investing in hotels? I mean, seriously, right? So
very, very few. It's a niche that a lot of people don't know, because what the misconception is, when you buy these assets, you have to have millions of dollars. Well, not necessarily. I mean, lenders love hotels because of the cash flow. These are cash cows in a way. So you don't need millions of dollars. You can syndicate deals. You can JV on deals. The lending is pretty. You have SBA lending. You have USDA loan. You have commercial BAP loan. There are so many programs out there. Typically, on the lowest you can put is 15%. The most you can be is, SBA requires 20%. But even the government will guarantee that loan up to 80%. It offsets the risk towards the banks. So there's so much opportunities, and, people have this misnomer here that, oh man, these are going to cost me a lot of money. I mean, I've seen, there's lease option to purchase hotels. You can lease hotel, stabilize it, and then you can purchase it. I mean, there's so many creative ways of doing it. At least I'm going to buy hotel seller financing. So there's a big myth that you need to have big capitals. I've known few other people who walked into deals with zero money down.
So let's talk about that real quick. So how have you been able to do that before? Like do a zero money down deal?
So with zero money down, these are operators. They thought they knew how to run. You need to have some experience to get into hospital, or have some people that know that business really well. So there were some people that got into the business thinking it was easy. There's not much, you just have front desk, because there's multiple facets to a hotel operations wise. And they pretty much, they put everything into the hotel, and, it was mismanaged, employee problems, and they just wanted to stop that bleeding. And they were willing to hand it off to someone that knew hospitality. And these, you walk in with 100% seller financing. You can walk into a hotel and know what's the problem. And these are easy fixes. And there's situations like that. You never know what people are going through. Or Another thing is too, if you don't have money, there's also lease option to purchase, where you take this asset and, you put your value add. You can do the PIP, which is is something that's given by the franchise to get it branded. And there's few, things you need to change in the rooms or remodel. You do that, you can get some FF&E loans to do that. Once you get that done and you stabilize it for a couple of months or so, and you put in a higher flat, you can go ahead, you have the right to purchase that now off of that lease. And there's banks that do that all the time. And whatever that PIP you do is credited towards your down payment because you already put those stuff in that hotel. So that is considered your down payment. So there's so many structures you can walk into deals.
So there's the business component to hotels, which we've been talking about. Now you're starting to touch on the real estate component of hotels, which is understanding how to structure deals. And that's the cool thing about hotels, is that you actually, there's the real estate aspect of it, and then there's the business aspect of it. And the two go hand in hand. Look at all the best businesses out there, like perfect example, right? McDonald's. Are they a hamburger company or are they a real estate company?
A real estate.
Yeah, because when you look at the balance sheet, it's a real estate company.
Real estate, same thing with Chick-fil-A. I mean, it's all about real estate. I mean, this is the oldest profession. I mean, more millionaires are made in real estate because real estate, it's a hard asset. I always appreciate. I've never seen, houses going down. Besides 2008, that was for a different reason. But it's a very stable market. People need a place to say, people need buildings. We need buildings. We need things.
So let's talk about the market real quick, because there's definitely some changes happening right now. And there's a lot of stress, especially in the commercial world, when it comes to the interest rates and what that's doing to prices, what that's doing to sellers being able, or owners being able to even hold on to their properties. So what are you seeing in the market right now, A? And what are you doing to prepare yourself to help your properties weather the storm, A, and then take advantage of the opportunities that can and will be out there in the next 12, 18 months?
Absolutely. Let's talk about the problem coming up, I believe, next year. Prices, inflation's high. In order to tame inflation, you have to increase interest rates, with the money velocity of the M2. But the biggest problem right now is we have $1.5 trillion of bridge debt, commercial bridge debt. That includes hospitality, that includes office space, and that includes multifamily. So these bridge debts were done back where 2020, 21, and 22, where they got these temporary loans to bridge that gap. And they were cheap at that time, 5%. And they did not get rate caps on them. And now they have a floating rate, and those rates are going 9, 10, sometimes 11%. So on top of that, so that now the rates are increased, and that cuts into your cash flow. And when it cuts into your cash flow, it decreases your NOI. So a lot of these people cannot refinance it because now they're at a loss. Number two, the value of that has just gone down. The real estate value has gone down as well, based on the NOI. So a lot of these guys are stuck. They don't know what to do with it. They can't sell it. They can't refinance it. And they can't. So there's going to be a lot of distress coming up, I believe, next year. They're just saying first quarter of next year is $21.2 billion. 24 and 25, and that translates to opportunities, a lot of opportunities, because for the past 14 years, things have been appreciating so high. And I think with this opportunities coming, and there's a wealth shift happening too as well, I believe there will be more opportunities to come. And right now, this is the year of, with any business, it's all about efficiency, cutting down where things are not needed, relying on key performance indexes, checking in people, now one big thing is in the hotel industry is housekeeping upon service. Hilton was the first one. Now we do not provide housekeeping every day. It's upon request now. So like I said, a lot of things are changing. Now you can check in yourself through a kiosk or through your phone. So there's a lot of small efficiencies happening. You don't even need to check in the front desk anymore.
Yeah, that's a really interesting note, is the efficiencies are increasing due to the technology that's available to us. And so it's a good time for some of these technologies to be leveraged in order to offset any unnecessary expenses. Yeah. Sure. Now, with all that being said, though, JD, what are you doing specifically for yourself and for the people who are partnering with you? What are you doing specifically to go out there and take advantage of the opportunities that are presented to you?
Well, basically, it comes down to explaining it. They're stating now in commercial real estate from the top, there'll be a 30% discount. And like I said, these discounts come once so often, probably a few times in a generation, I would say. So it's basically telling it the times that are coming right now, take advantage opportunities to get something, at the bottom, and there will be more opportunities to double or triple or 4 times your money. So basically, I'm going educating investors out there of the opportunities, the different ways we can change or do the value add of things, changing the flag, going to a higher flag, streamlining efficiency and technology. Right now you can check in from your phone and unlock your door to your room with the phone. There's many now equipment out there too. A lot, biggest thing right now too is a lot of the hotels are changing to showers a lot of the franchises are requiring to go moving the next 5 to 7 years to showers. Showers are easy to clean. Number 2, a lot of the times they want vinyl LVT floors. So you're not carpeting. There's no carpet. So you're just spot mopping or spot cleaning easily. On top of that, there's so much, I would say, training that goes to housekeepers to make it more efficient. Cleaning products are out there. Even with washer, a lot of the washers come with this smart sense. When things are more so, they'll wash it more or not. There's also different technologies. Best Western has this air wand where they'll wave it in, and it kind of kills all the bacteria around it. So there's so much happening. It's going at a fast pace where sometimes we can't keep up. And top of that, so, a lot of front desk, they have kiosks now. So sometimes they won't have a night person or night audits where people just check into this kiosk and there's a phone there if you have any problems. So on top of that, so just changing, educating the investors that things have streamlined to a certain degree. That is gotten so efficient now that the cash flow is so much better now. There's so much opportunities with opportunities to come. So it's mostly educating and telling them the different structures of the deals, telling the different value of things and the different franchises you can add to. And on top of that too, you can also, like I mentioned too, a different business plan is you can also take these assets and sell it to the state or to the city. A lot of the cities have this refugee problems, they house a lot of these people. During COVID, they had to put a lot of these patients in hotels. A lot of people, especially in California, there's a thing called Project Home Key, where the state is buying hotels, multifamily, and converting them to transitional housing. So there's so much opportunity, so much different ways of looking at things. You can take these hotels and make them into timeshares. So there's so many different ways when you're exiting and explaining to the investors. There's not just one way, just running it as a hotel and you sell it to a hotel. You can do other things with it. You can master lease these hotels. The VA has grants right now for sober living, and they're looking for hotels. So there's so much different opportunities than just running as the same thing about being a doctor. There's so many other opportunities in a doctor realms. You don't have to be writing prescription. They can work with insurance. They can work for, med tech. There's so much different opportunities. Just thinking outside the box and just not keeping the limited focus, just hotels. You check in people and check out people. So much more to it now.
That's awesome. So really what I'm hearing you say then, JD, is that there's going to be some opportunities out there, and your job is really to identify those opportunities and figure out what the best use case is for that asset. Because what I'm hearing is that maybe not all distressed assets that are coming up, maybe the best solution isn't to keep it as a Hilton or a Marriott or whatever brand. Maybe it's converting it to some other type of housing, or your job is to basically find the need and fill the need. Yeah. Identify the distressed asset and then find or figure out what the best opportunity vehicle is for that asset moving forward.
Correct. Absolutely. So, whenever I look at a deal, I always look at it two ways, a plan A and a plan B. If plan A doesn't work, plan B works, By default, we can run it as a hotel, motel. Okay. That's the default. We can up flag it, bring a different franchise, do a remodel. But there's other ways of doing things too, Look for hotel conversions. Cities are giving grants, taking hotels and converting them to multifamily. That's a big thing right now because the United States, we're short by 4 to 5 million homes. And I'm not even talking, let's not even talk about single family homes. I mean, just homes for people to stay. And this is right now. So right now, there's a push for hotels or motels to be converted to apartments. Cities are giving grants. There's construction bonds where 90% of it will come from this bond. So there's different avenues. I mean, VAs is looking for opportunities for VAs to stay there for alcohol, or exactly for sober living, I should say. And also you can take hotels, and I've seen them into assisted living facilities as well too. So it's not just one way of looking things. I mean, my job is to maximize that dollar, okay? Mm-hmm. Whether it's plan A or plan B. And there's so many opportunities. I mean, if you're in a high barrier market in a leisure area, make it into a timeshare. And there's companies out there that will have to buy that. Again, right. There's people where you can, there's these condos where they Airbnb it, you can buy some of these condos. Well, forget the Airbnb. You can bring a soft brand like Hilton, and these owners can go within that reservation system and put out their condos for rent. So like I said, different models. You can rent out your condos. If you have 20, 30 condos, you own the lobby, and then you have an HOA that will pay into that, for your front desk. But there's so many different models of business. I mean, there's always new ideas coming up as well.
Well, you make it sound very easy. Let me just reassure everyone who's listening to this podcast. JD is making it sound a lot easier than it really is, but he has lots of experience and he's been doing this for a long time. And it's that cumulative knowledge base that you've built over the last 10 years that's allowed you to really think outside the box. Yeah. Because at first you come into it and it's like cookie cutter. But then as you start to get into it and you start to do more and more deals, that gives you the opportunity really. And that gives you the experience, gives you the opportunity to really start thinking outside the box. Yeah. So it's easier said than done, but definitely with someone that has enough experience like you can get all that stuff done.
Honestly, I'm not the smartest guy out there. To me, it's just getting your hands dirty. Sometimes you got to do front desk. Sometimes you got to be there night audit. Sometimes you got to do housekeeping. You got to, and that's how you learn it. You get in, get your hands dirty. Learn from, employees, because I've learned so much from my own employees than anything else, honestly. Numbers are one thing, but getting inside and getting dirty, that's how I learned operations, working with some of the best managers I've ever had. And I've learned, I have a sales manager. I learn from her every day. I mean, there's so much looking at different aspects and different jobs. You got to wear that job. There's so many jobs, you got to wear all of them. In case something ever happens, you have to step up. So it's, to me, I just like, it's simple. I make it simple. This is not too hard. Maybe someone coming out from looking outside to inside, it might look, but It's not that hard. It's all about hospitality, the smallest thing. Your biggest focus is that guest. What can you do to make their stay the best? Simple things, when they check in or when they check out, ask them, hey, what was wrong? What is there we can improve on? When they check into the room, we try to call in right when they check in within the next 5 minutes. Hey, is everything okay in your room? Is there something else we need? Follow up, provide amenities. A pool is a simple thing. A fantastic gym. People love to exercise. So the small things make a huge difference. It's not a lot of these business travelers just come, sleep and leave. They're not there throughout the day. So with business travelers, there's not that wear and tear. For instance, if it's a leisure business where there's kids, those rooms get turned. There's a lot of wear and tear. You got to touch up the baseboards. The simplest thing. So there's a lot of preventive maintenance goes, and you got to understand your demographics. And like I said, it's the smallest things that matter. Having music in the lobby, just simple things. Everyone smile. It's hospitality 101.
So you are not the first guest that I've had on this podcast. A mutual friend of ours, Sujay Mehta, was on the podcast, and he also mentioned very, very successful hotelier. Yeah,
absolutely. He's killing it out there.
Killing it. Also mentioned the same thing. Hey, like sometimes you got to get for lack of a better word, your hands dirty, right? You got to go in there. You got to do the groundwork. And it's interesting how someone that has as many hotels as you do, which how many are you at right now, JD?
Man, I lost count. Total, man. Jeez, I have to fuck. Just say it's double hands. I've used both hands.
Yeah. I think it's somewhere around like 12 to 14, right? And
yeah, somewhere there. Sometimes you buy some, you sell some.
Yeah. So you've got your like a dozen, like we just got more or less, but you're still saying, hey, like occasionally, like I got to go do some of the heavy lifting. Sujay said the same thing. He's like, hey, sometimes I gotta be the boots on the ground. And for anyone listening at home right now that's thinking in passively investing into a hotel deal, make sure that the person, the quarterback, whoever's the general partner or however it's structured, right, the person who's going to be in charge of putting that deal together, make sure that they are willing to get their hands dirty, that they have someone on their team, that it's not just going to be like, oh, we're going to put a management company in there, which is fine, by the way, but that isn't their only option, that they have people in their organization that can go there and actually be present when needed.
Absolutely. Yesterday we had an incident at one of my hotels about an hour away where we didn't have a night auditor, and I asked, hey, if there's no one there, I'll come and drive there. And the biggest thing with investors, I have to sleep at night. I have to come with a clear conscience. I'm not going to take someone's money and, don't care about there's a property manager. I want to sleep at night. I'm not going to take someone's money. And if there's capital, for instance, if there's capital calls, I have to sometimes put my own money. I have to put my skin in the game because I believe in my product and I believe in our model. And so as much as people are passive, on the other hand, we're always 24 hours thinking about the asset and our investors at the same time. Because if they don't make money, we don't make money. And number two is building that track record. My track record precedes me. And I do not want under any condition to destroy that integrity in any deal. So sometimes you have to roll up your sleeves and do the messy work, and top of it is teamwork. It's not just me. The thing is that I work with my employees. My employees have been there for a long time, and it's all about loyalty and working with them. No one's better than you. I've learned from my housekeepers every day. They can, it takes me about an hour to clean one room, and I give these guys props. They can do it in 20 minutes, they have that dedication, the love and pride for the hotel. And sometimes you got to do it for the hotel, So, numbers will say something, but the pride and joy, seeing people checking in, checking out, and they have an experience. I mean, the hotel behind me here, you see it, this is our lobby. And my employees love this. It's built in 1852, and it's not your cookie cutter hotel, where you go to Holiday Inn Best Western 2,000 miles away. It's the same kind of room you'll see somewhere else. But this is an experience that people go into, and it's a walking museum. So there's really interesting hotels out there. They're not your basic cookie cutter hotels. I mean, there's hotels that are haunted. There's, bed and breakfast. So there's different experiences out there, and people are looking at that.
Yeah. I was going to ask you about that. The background there. I was like, that looks like a lobby,
Yes. It's a lobby of mine. It's a hotel in Jackson, 36 rooms, built in 1852. Crazy story is that John Wayne was kidnapped here, and there's Ulysses Grant stayed here. There was rumors Abe Lincoln stayed here. So it's a walking museum. I mean, we have the original bar from there. We have pictures from the 1800s. So
That's cool.
Like I said, this is not your prototypical hotel. We are converting it to a Hilton Tapestry brand. We're under design review, but everything is still going to be period correct. The biggest thing is going to be paint and carpet, which is, every 7 years in these franchises, you're supposed to, change. So, but yeah, like I said, this business, I don't think there's no other business like the hospitality business.
100%. So I know that we're coming up here on time. There are a couple other questions that I had for you. And I do want to switch gears a little bit back to the physician focus. Yeah, because I think that there's a lot of value that someone who is in medicine right now can get from this podcast. And I want you to speak to them right now. So what is one secret that most physicians don't know about hotel investing? Or we could even open that up maybe to real estate investing in general. But what's like one secret that most physicians don't know about either hotel or real estate investing that you wish that they knew?
One thing doctors, being in the hospital, doctors always, number one, complain about taxes. Okay. Taxes. They always complain, they're W-2. You can, in real estate, you can basically depreciate your whole salary in one deal. And it's amazing. Okay. And a lot of doctors don't know that, they think in real estate, you have to pay taxes. So again, doctors, physicians, in real estate, you can offset your taxes just having one vehicle of a commercial real estate. And that's basically it. If you want to save money, you can work forever and be paying taxes to Uncle Sam. There's this opportunities. I know doctors who just invest for the tax depreciation. That's all they do. That's all they care about. But on top of that, they're making money too. So it's a win-win for them.
This would probably be a very opportune moment for me to provide the legal disclaimer that we are not accountants,
tax
absolutely professionals, and this is all entertainment. You should definitely speak to your CPA or a tax professional to learn more about what JD just mentioned. But it's true. There are a ton of tax benefits. Not just in hotels. I think that you covered the benefits, especially when you factor in cost segregation to hotel investing, but just in general, like real estate investing in general, there are a ton of tax benefits available to both, not really active investors. I mean, sometimes general partners do get to participate in those, but really these investments are a pass-through vehicle, and these tax incentives pass through to the limited partners, to the investors. Yeah. So there's a lot there. And so I would encourage you that if you are unaware of all of the great tax incentives that are associated with owning real estate or investing in real estate, either through syndication or private equity, just understand that you should probably speak to your accountant and really get a firmer grasp on the benefits of investing. And JD, for someone who is sitting on the fence right now, there's a physician who's sitting on the fence about dipping their toe in the real estate investment space, what would you say to that physician?
I was telling my son, the most expensive real estate in the world is the graveyard. There were untapped ideas, potentials, deals, things that were never pursued, would, coulda, shoulda, and another thing too, physicians too is, you think about the future is anxiety. You think about the past is depression. Think the moment. Take that one step. You don't have to put so much money. There's deals out there where you could put 10, 25,000. Just try it. Get your feet wet, and you will see the numbers or the opportunities in hospitality. Just take that first move and make sure, confirm as much as you put your money in there, interview the GP team, the general partners, because it's a marriage. Easy to get in, hard to get out. And they need to have a track record. So what I'm saying is, as much as you're putting your money, also look at the track record of the people who are behind it. What have they done? What were the exits? How is it like-minded thinking? Are they thinking about technology, the newest technologies, efficiency? Do they have a good track record with franchises? There's a joke here in hospitality with the franchise owners here. It's a stepping stone. You start out as, your economy scale, your Econo Lodge, then you go to your Best Western, then you go to your Choice Hotels, then you go to IHG, then you go to Marriott, and then Marriott and Hilton's, So I started the same way. That's how I learned from going from smaller hotels to my big hotels now. And that has put a track record. And a lot of these franchise, they don't just give the franchise, we're going to get our, franchise fees and we're going to just add it. They're also looking at our track record too. They're doing their due diligence as well too. So like I said, this is a partnership. It's teamwork. And it goes same thing with their employees too. We are in it together. If we fail, we all fail. But in hospitality, the chances of risk are very minimal, but do your own due diligence at the same time.
100%. And that is great advice, man. The most expensive real estate in the world is the graveyard. Untapped ideas and potential. It's a great life lesson, not just investing lesson. Hey, listen, we, in traditional Gould Mine fashion, we want to leave the audience off with your final, JD, Gould nugget.
Something that Henry Ford said, if you can or you can't, you're right. So, your mind is your enemy or your mind can be your best friend. Pursue everything. Try it. Put your first foot in and let whatever, believe in God, energy, whatever. And if there's a will, there's a way. So don't have limited beliefs.
I freaking love that. What a way to end the show, man. So JD, if the people who are listening right now want to connect with you, what's the best way for them to connect with you? Where can they find you?
See, I love people. I love building relationships. I'm willing to give my personal phone number because I believe it. If I can help someone, I pay it forward, So my cell phone number is 916-749-0245. Or text me, call me. I'll give you my personal email too. It's J as in Jack, D as in David, S as in Sam, I as in Ice, N as in Nancy, G as in Garage, H as in Horse, 913@gmail.com. Or my business one is J as in Jack, D as in David @globalcapitalhotelgroup.com.
Awesome. And for anyone that's listening right now, all of that will be in the description below. So you don't have to take your notepad out and write down JD.
Yeah, no worries.
That's awesome, man. Hey, and how selfless of you, man. Like you have all the reasons in the world to not take people's calls. You've got tons of experience, lots of bigger problems, bigger fish to fry, but that's very selfless of you to be giving out that information like that for anyone that wants to get a hold of you. So thank you.
And there's no financial gains. I'm here to help, and that's how I think, paid forward. Be selfless sometimes.
Love it, man. Well, JD, appreciate your time here, man. And it's been awesome, brother.
Thank you. Thank you for the opportunity to share my views and opinions.
All right, man.
Take care.
Sweet.